So this morning the UK election ends in a hung parliament. We're left with more questions than we had at the start of the process. We're likely going to have a coalition with the DUP. Will there be a leadership contest in the next few weeks? Brexit negotiations are going to start in 10 days. We're starting from a weaker platform than we were before the process. Prospect of a Scottish referendum has now fallen away. And I think we've seen a move towards a resurgence of the anti-austerity feeling in the country, which has driven some of the voting. In terms of the market, this morning we saw quite a dramatic fall in sterling against both the euro and the dollar. It was down over 2% at one stage. That's now rallied to around 1.6. The FTSE is up 0.5% due to its international earners, and the domestic 250 is down around 1%. The market weakness has been centred on the consumer stocks, the domestically focused stocks, so that's the travel, the retail, the housing stocks, as one would expect. And that's about pressure on household incomes and consumer retrenchment coming through because of uncertainty, and also because of a weaker pound and seeing the cost of living rise as international goods become more expensive. We've seen a slight increase in the yield curve, so rates at the short end have come down, less likely to see rate rises given the uncertainty. And because of this need for fiscal stimulus, we've seen a little bit of a rise in the long end of that curve. I think the Brexit uncertainty will now create potentially two-way volatility in sterling. As people perceive that we're going into the negotiations with a weakened hand, I think you see a weaker sterling. But if that timetable starts to get pushed out or fundamentally altered, then you could see quite a big rally in sterling. In terms of the week ahead, it's another quiet week. We're between the reporting seasons. The key stock for us will be Ashtead, which is reporting on Tuesday, which I'll talk about briefly. Here we've got a chart of Ashtead and their revenue growth since 2010. As that revenue has expanded, so has the margin, and this business we think has further to go here. They're operating in a highly fragmented industry where around 500 players account for 70% of the capacity. So as Ashtead roll up that industry, and they've got around £1 billion on their balance sheet to do that, they can add profitable growth to their business. Because of their scale, they are able to return around twice the return on capital compared to the fragmented other parts of the industry. So they really are able to take out that capacity. And we feel that that process, in addition to the potential benefits from tax cuts from the Trump campaign and also more infrastructure spending, will continue to feed into that profitable earnings growth that we're seeing in Ashtead.